Hope everyone's doing well and had a good day. This is the Emini review for Wednesday, June 5th, 2024. And overall, really interesting day. And I want to start by briefly talking about the weekly chart in the top left. You can see it's Wednesday, we're halfway through the week, and we have a bull reversal bar closing on its high currently. But the problem is that we're halfway through the week, so we still have 2 more days of this weekly bar to go. So the question is, will the bulls be able to keep the bar closing near its high, or will bulls take profits and will bears short, and will the bar close more as a doji or even a bear bar? The problem I have here, we had this strong rally and then a high 1 buy with a weak signal bar. We triggered the buy above last week's high, and you can see again we're on the high of this week, but the odds were there were sellers above last week's high, even if they don't come in immediately. We had big down, big up, so big confusion, trading range price action, sideways, lots of overlap for the past several weeks. And now we're triggering the high 1, but we had a rally and then a pullback that disappointed the bulls. So the odds are we have disappointed bulls who bought up here and got trapped, looking to exit their longs. And again, it's a trading range, so traders are looking to sell high. For the daily chart today, coming into the day, we had a high 1 buy set up with an inside bar. Yesterday's, the daily chart bar yesterday was a high 1 signal bar. It was relatively low in the range. The bulls are keeping bars above the moving average, but it's a tight trading range. So I thought even if we did go more to the upside, I thought the upside would be fairly limited. I thought there'd be buyers below yesterday's low if we got there, because it's a bad low 1. And as far as buying above, traders might buy for a scalp, but as far as going for a swing here, I'm not as sure because it's a tight trading range. And so I think when we get high in the range, like above the May 23rd high, it's more likely bulls are looking to take profits, traders are selling high and buying low. So overall sideways, as strong as today was, it could easily be a buy vacuum test of resistance. The bulls are hoping we have a strong enough rally and then maybe a 2-legged pullback that maybe gets a measured move up, something like this. They're hoping we get up here, the measured move, but I think more likely we'll continue to go more sideways. And then for the 5-minute chart today, so we gapped up above yesterday's high, and let me draw yesterday's high. So gap up on the open, and then a bear bar on bar 1. So the market rejected the gap. You can think of the gap as a bull breakout. So now possibly, maybe this is the first leg, second leg, third leg up, and maybe it's a wedge top, which is what the bears are hoping for. Something like that. 1, 2, 3. And a bull breakout of a channel, so low probability. And then you get bad follow through on bar 1. Probably more sellers above bar 1. And there might be sellers below bar 1 because we're far above the moving average. We had a lot of sideways price action here. But it's a big enough breakout, the gap up, big enough gap that you can expect at least some sort of second leg in the direction of the gap. So probably a little more to the upside. It's unlikely that bar 1 remains the high of the day. And then follow through selling on bar 2. We have a tick gap from the close of bar 1 to the open of bar 2. And that's a sign of urgency and strength by the bears. Is it sell to close or always in short? I don't know. It might be, but the problem is that we had that big gap up and we're far above the moving average. And it's possible the bulls are in control and they're just stepping aside and waiting to buy lower, like possibly at yesterday's high or some other support. So as far as being short here, I think it's okay to be short. We had consecutive bear bars, one fairly big, and both closing near their lows. This is strong enough down that it'll probably get a second leg. And then a bull bar bar 3. So if any traders did sell the close of bar 2, they're obviously disappointed with their entry bar on bar 3. It's an inside bar, so it reduces the probability for breakouts, so probably more sellers above bar 3 and a second leg down. The bulls, they probably want this to be a gap up and a pullback, and then a high one buy, but after 2 consecutive bear bars like this, that reduces the number of traders, the number of bulls buying above bar 3. Even though it's a bull bar closing on its high, it's also an inside bar, and that damages the bull case. The market's going sideways here. The past 2 bars completely overlap. And then you can see we had sellers above bar 3. We triggered the buy above bar 3, and then bulls got trapped, and then bar 4 turned down and closed on its low. Low one short below bar 4. The problem, you're selling where bears just got trapped on the close of bar 2, but bar 4 closed on its low. And now you've had 3 out of 4 bars closing bearish, so I think it's okay to take the low one short and look for a little more to the downside. Leg 1, pull back, maybe a little more to the downside. Maybe we test the moving average. We're probably going to test yesterday's high. And then bear breakout bar 5, but immediately pulled back and closed at the lows of bars 2 and 3. So it could be a lot stronger, obviously. But as far as buying above bar 5, most traders won't because it's tight enough down. This could all be one leg on a higher time frame, and it is technically a high 2 above bar 5, but you've had 1 bull close in 5 bars, and the signal bar for the high 2 has a bear close. The odds are there are sellers above, and we'll go more sideways to down here. 6, another inside bar, and a bull bar closing on its high. But again, as far as buying here, it's tight enough down that most traders want to see more buying pressure and see the market go more sideways and possibly get closer to the moving average. Because we're still well above the moving average, we've had 4 out of 6 bars closing bearish. And so that's not far above average bullishness. So why would traders want to buy average or even bearish price action if we're far above the average price? And the answer is they won't. So they're going to wait to buy lower. I think there's probably buyers below bar 6 and bar 5. The bull's hoping we get maybe 1, pull back 2, and then a wedge, 3 pushes down at support. And bar 6 is a low 1 short, but a bad signal bar. Plus it's an inside bar, so it reduces the probability for breakouts in either direction. But again, at this point, yesterday's high is so close, we're probably going to test it. 7, a little bit of a surprise. Probably a report on bar 7. That's a common report bar. Bar 7, 10 a.m. Eastern time. Common to have a report and have the bar do something a little bit unusual or unexpected. You can see over to the left on my screen. Bar 7 yesterday was a similar situation. You don't have to watch the news or know what the report was. You just have to be aware that there could be a report on bar 7. Bar 7, it's a big bar, but it has a really small body. Look at the range of the bar. 13.75 points, but the body's only 2.25. And so there was a lot more buying pressure into the close. So the bulls, they did the minimum. They got the bar to close above its midpoint, really close to its high. And the bears, at one point this was a bear bar closing on its low, but then all the bears gave up. We tested support to the left, the moving average, yesterday's high. We came close to yesterday's close. We came so close we might get there. Even though this reversed all the way up, the odds are we'll go at least a little bit lower. Big enough breakout that we'll probably get a small second leg from here. Some traders see this as 1, 2, 3 pushes down in a climactic third leg, breakout of a channel line, which would be this. But again, big enough breakout. If bulls bought below bar 6, they're sufficiently disappointed. And now that 7 came all the way back to their entry price, they'll be happy to get out at break even. And as far as buying above 7, big bar, so big risk. And as far as the buying pressure, like I said, you've had 2 bull bars in 7 bars. The bulls are not doing enough yet. And the trader's equation is bad for buying above. It's a bad signal bar, and 1-to-1 is all the way up here. And it's clearly not 60% that we're going up here before we're down here. So probably sellers above 7. Inside bar 8, bear trend bar closing on its low. So good for the bears, but the fact that it's inside bar 7 is a problem because that's overlap. That's a trading range. It's really a channel, but you know that the odds are there are buyers below bar 7. There's also probably buyers waiting at yesterday's close. Strong enough bar would probably go at least a little bit lower, but some traders see this as maybe one push down to bar 5, pull back, down on 7, pull back, down on 8. And again, we'll probably go a little lower, but the downside might be limited. This looks more like a couple of legs down in a trading range, and not a strong bear trend. And what follows legs in a trading range, bear legs in a trading range, is bull legs in a trading range, if not a reversal. It's the open. So this is the opening range so far, and we've had a weak sell-off with maybe 3 pushes down. And any breakout on the open has about a 50% chance of being the wrong direction, and the market could get a measured move in the opposite direction. So traders are wondering, is this the opening range, and is this actually a weak sell-off that will reverse and we can come all the way up here? Other traders, they might bet on the bear breakout, and a measured move down of the opening range takes you to support over here. Bar 9 was a bull bar and an inside bar, so disappointing for bears. If I'm a bear and I'm short, I'm getting out of shorts above bar 9 because it's possibly a wedge bottom. And is it still too tight to buy? I don't know. I thought it was too tight to buy here, but when the bears got this giant bar, they got reversed, and then another strong bar, they got reversed on bar 9. Not that it reversed all the way, but bar 9's a disappointment bar, and if this is a trading range, we might be low in the range, testing support to the left. The bears got 1 close below yesterday's high after 3 attempts at it, and so it looks like we might have support at yesterday's high. So for bar 9, I think always in bulls can buy above 9. It's not the strongest setup. I think what's better, probably better to get out of shorts above 9. Bulls might wait for more information, more clarity, and higher probability. And then consecutive bars on 10, but it's a smaller body and a smaller bar than bar 9. What the bulls have going for them, it's completely above the moving average, and it's a low 1 short in a weak sell-off. So possibly a low 1, low in a trading range, right at the moving average. So probably buyers below bar 10. And you can see what happened on 11. Traders had limit orders to buy below 10, and they weren't getting filled. And then eventually, they kept pulling their limit orders higher and higher, and eventually they maybe started buying the market as the bar started going up, feeling a sense of urgency. Bar 11's a little climactic. It's a bigger bar than the prior 2 bull bars and a fairly big tail above. But if you're a bear and you were betting on a second leg down after bar 8, which was reasonable, even though it was maybe 3 legs down, strong enough bar 8 that you might get a second leg down. So if you sold above 9, you're trapped on bar 10 and 11. So now we have trapped bears after this bull breakout. And if you were a bull who bought bar 3, and you scaled in lower, you were able to avoid a loss and make a profit if you scaled in by bar 11. So this is clearly a trading range, big down, big up. Most strong bull trend days don't start with big bear bars like bars 1 and 2 and then bar 8. So at this point, more likely a trading range day. Bar 12, another bull bar, so 4 consecutive bull bars. And the breakout is still growing. It's not the strongest breakout in terms of when you dissect the bars. We have tails above, The bars are not uniform in size, but the breakout did go far. So if you bought above bar 9, then by bar 12, you would have made at least 8 points. That's a fairly big move. So stop order bulls making money. It's clearly not a bear trend. Like I said again, big down, big up. So trading range. Traders usually want to sell. Traders do want to sell high in a trading range, which would be maybe around the bar 1 high. But after 4 consecutive bull bars, they're not going to sell the first reversal down. And then more buying on 13, getting vacuumed up above bar 1. The probability that bar 1 remains the high of the day is about 20%, so no surprise we trade above bar 1. And then this is now looking like a strong rally. It's very likely that the rally from bar 9 to bar 13 gets a second leg. And remember what I mentioned earlier. Actually, first of all, if we measure the opening range, it's 21.5 points. And on the daily chart, the recent daily range average, I don't know, we've had 40-point days, 60-point days. Here's 42, 66.5, 100. One of the smallest ones here is almost 40 points, and then 20 points, but that's an exceptionally small bar. And so the point I'm getting at is it would be strange if we stayed inside this range all day. Even this range, the high of bar 13. So that's 23 points. It's likely that the range of the day will at least double. And at this point, it's more likely it'll double to the upside. And so here's that opening range measured move. Bulls are looking at this projection for a measured move target. Strong enough rally, probably get a second leg, possibly a spike in channel bull trend up to here. The bears are hoping this is a buy vacuum test of resistance and that bar 14 reverses at least bar 13, and that 14 is a big bear trend bar, the same size, if not bigger, as 13. That's what the bears need to convince traders this is a trading range. This was a buy vacuum. It'll still maybe get a small second leg, but it'll be more sideways. And then look at 14. It's a pause bar. It's a little disappointing for the bulls. But if a bull bought 13, the odds are still that we'll get at least a small second leg up. And the market likes order and symmetry. So more likely it'll get a more symmetrical leg. If you look at the bear legs today, maybe this was leg 1, and then a pullback, and then leg 2. And look where bar 7 reversed, right near a leg 2 measure move. So that would be leg 1 down to 5, pull back to 6, and then leg 2. Here, this is all one leg. Even on this chart, there were no pullbacks from bar 9 to bar 14, so this is a micro channel. The odds are there are buyers below, and the first reversal down will fail. You are high in a potential trading range, so big down, big up. Not ideal to buy here. But if the bulls continue to show strength, it will eventually be okay to buy because the probability will be higher, but you need more information. For now, what do you do with bar 14? It's a pause bar, and it's high in a range, so there might be more sellers above, but if anything, it's probably profit taking by the bulls. The bears don't have enough selling pressure to sell yet. 15 a bear bar, but it broke out below 14 and then closed above the low 14. 15 is a high 1 signal bar, so probably sellers above 15. But like I just said, strong enough rally, the first reversal down will probably fail. So there's probably more buyers below 14, buyers below 15, and the bears need at least a micro double top before they'll sell. 16, we fell below 15 and then reversed up. High 1 above 16 with a bull body, so a better high 1. And it's potentially early in the market cycle, strong breakout, then pullback, and then maybe a high 1 and the market rallies. But again, still, we're possibly high in a trading range, and you don't want to buy high 1s high in a trading range. If bar 16 closed on its high, it would have been a better buy, but for now, It's a 3-bar micro channel for the bears, but the problem is that it's a rally and then sideways. It's a doji and a bull bar. The bears have 1 bear bar in this micro channel, so it's not as strong as it could be. Probably buyers below 16. The bears are hoping they get a double top, a higher high double top, bar 1 and bar 14, but they need a reversal on 17. 18 or 17 inside bull bar. So the market, it's a small triangle. And the bulls are hoping it's a rally and then a flag. So a bull flag, a pullback, and then a breakout to the upside. The bears hope it's a final flag and that this rally, even though it should get a second leg, the bears are hoping 16 and 17 was the second leg that the bulls will get and that they'll get trapped, and then we get a bear surprise and a reversal down. We've had 1 bar close below the moving average all day. That's a sign of strength for the bulls. And then we had this. If you look at yesterday's pattern with the spike, deep pullback, market's in a bull channel. Traders will draw it different ways, but we are getting higher lows and higher highs. So probably always in long. We were probably always in long by bar 12, if not 11. $18, another small bar. The market's still getting squeezed. It broke out above 17 by 1 tick and then went sideways. So not ideal. But what do the bears have? You have to ask. There's always an opposite. So even if this isn't ideal for the bulls, it's still always in long, and the bears need to do more than this. The bears have had 1 bar since bar 9. 14 was a doji. That's not enough selling pressure. And what might end up happening, remember I said we have trap traders, sold above 9, sold a close of 8, sold above any of these bars, maybe 7. They're all trapped. We tested this breakout point. We broke out above the high of 4, pulled back and tested it on 16, and then found buyers. But as far as the bears down here, they're still trapped, and they might be getting squeezed out here. And what that means is they'll be forced to liquidate their positions and buy back their shorts, and that will produce a second leg up. 1, pull back 2. We might get a give up bar. And I'm saying that because what's the bear case? Well, you have a tight bull channel. It's a breakout, a spike, and then we went sideways for 5 bars, but we went sideways for only 5 bars. So rather than calling it a trading range, it might be a bull flag, and the odds are we'll get a breakout to the upside. If the market continues going sideways for maybe 20 bars, then the probability shifts back to about 50-50, and you can call it a trading range. But at this point, Al would call this a bull flag. And it's a tight bull channel, so your options are long or flat. And it's always a long, so it's okay to be long. And then 19 is your give up bar. Bears, they're not getting the second reversal they need. And then 19 represents traders buying back shorts and bulls going long. 19, you can buy the close. It's a strong bull bar. The only problem is we're really far from the moving average, and the risk is pretty big. Your stop is probably below bar 16. And so if you buy here, big risk, but your probability is fairly high. Probably at least a 60% chance we go here before here. And then bad follow through on 20. So what do you do on bar 20 if you bought? Do you get out of longs? Some traders will. I think it's okay to get out of longs below 20. It's a bear bar closing on its low, and it's 2 legs up. But I don't know if this was enough of a second leg. This was a really big and stronger second leg, or first leg, that was expected to get more of a second leg. And maybe a measured move up. Maybe you take the bodies, and here's your measured move. Can you sell below 20? I would not. It's still a tight bull channel. Again, you might have bulls exit below 20, but as far as selling below 20, it's the second bear bar since bar 9, so not ideal. You've had two bear bars in about 10 bars. There's not enough selling pressure. This is still a tight bull channel, which is a breakout on a higher time frame. So again, the only options are long or flat. And then 21, even if you were to sell out of longs below 20, you never got triggered. Even if a bear tried to sell below 20, they couldn't sell below 20 on a stop. Bears who sold the close of 20, front running a sell, got trapped on 21. So they got further trapped. Now we have open gaps. A bear who sold the bar 8 close or above bar 9 or above bar 4, they're all getting trapped. And then here, we did close the gap. We have a breakout above bar 14. 20 was a vacuum test, so breakout, pullback, and then continuation. So 20 might have been a breakout pullback. Buy setup. You have aggressive bulls buying the close of bar 20. 21, strong enough bull bar, probably going at least a little higher. Magnet above, and still no sell setup. And then more buying on 22. Again, the risk is big for the bulls, but the probability is high, and that's the trade-off in the trader's equation. Whenever you have good risk-reward, you have bad probability. And whenever you have bad risk-reward, like big risk here, you have good probability. It's clear the market's going up, and so you really only want to be buying. When's the last time a bear made money? Even if a bear sold above a bar, if they were really quick, if they sold above 14 and scaled in higher on 19, they might have made a quick profit, but it's so much easier to just trade in the always in direction. As far as selling below bars, bears haven't made money selling below a bar since bar 6. 22, follow through after a bull breakout. Some traders might see it as a wedge, 1, 2, 3. So you might have some profit taking on 22 and exhausted bulls, but it's still always in long, and any pullback will be minor. Inside bar 23, high 1 buy, but again, maybe 3 pushes up. We might have to correct a little more sideways to down before bulls are interested in buying again. So there might be more sellers above 23, but if anything, it's probably profit taking by the bulls. 24, another high 1 buy setup, consecutive dojis, probably entering a small trading range, but again, it's a bull flag. It's only 2 or 3 bars sideways, and the directional probability is fairly clear. The market's going higher in a tight bull channel. Small bar on 25, so the market's in a tight trading range over the past 4 bars. So you might have traders selling above bars like 24 or 23 or even 22. But some traders will buy 25, betting it's a high 1 and in a strong bull trend. And there are open gaps. I think it's okay to buy 25. It's okay to be long, but you need a wide stop. The closest your stop should be is probably below 21, the last major higher low. Major higher lows are lows that lead to strong breakouts, typically to new highs. 9 became a major higher low after maybe 12, definitely after 13. And then 16 did not become a major higher low until bar 19. And then 21 became a 1 bar major higher low. It's a strong breakout to a new high, and then got continuation. So the bull stops are probably below 20 and 21. Bull bar 26, but within this tight trading range, there might be some resistance. Bulls who bought the high tick of 22 are disappointed. Scaled in lower, they might be taking profits here. There is a tail above bar 26. That's a sign of hesitation and selling into the close of the bar, which is not ideal. But as far as selling 26, of course not. It's a tight bull channel, and if you consider bar direction, we haven't had a bear bar since bar 20. 23 and 24 are dojis closing above their midpoint, and 25 and 26 are clearly bull bars, so selling below 26 for a micro double top is not wise. We may go a little lower, but bulls are scaling in. 27, another breakout to a new high. In a strong bull trend like this, traders are buying at the highs. They're buying the high of the day, betting that breakouts will succeed. We still have this magnet, the measured move of the original bull spike. So spike, pullback, channel, in a really tight channel. And tight channels are breakouts on higher time frames. So if we reach this target and continue through it, traders will wonder if this was a new breakout on a higher time frame, and we may go all the way up here. And again, as far as selling, there's just nothing to sell. So if you're having a hard time getting long, that's okay, but there's no reason to sell here. And if you have any desire to sell, you should stay flat because it's a tight bull channel. Bears have not made money since below bar 6, and you don't want to be the first bear to make money. 28, a bear bar, but a minor reversal, probably profit taking at new highs. It is the channel phase, so you will have some traders buying below bars and taking profits above bars, but strong enough up that it'll probably get at least a small second leg, and this magnet is getting fairly close. It's really clear the direction we're going. Still no sell setup, buyers below 27, probably buyers below 28 as well. Breakout below 28 on 29, but it immediately pulled back and could not close below the bar. And so bulls are buying below bars. 3-bar micro channel since 27, so maybe the first reversal to the upside will fail, and this may get a small second leg. But it's really minor, and I would not be trading to the downside. 29 is also a high one, and it might be late in a trend. We're about 20 bars into a bull trend, but it's still really tight, and it's possibly a small pullback trend day. I said earlier it was more likely after this sell-off and then this rally, probably a trading range day, but then we got more information, and at this point we could easily be in a small pullback trend. We have open gaps, bears are not making money, and this could continue for a long time. 29 is a bad high one, but even in strong bull trends, bad setups are actually reasonable to take. Traders can buy for any reason, and they're probably going to make money here, as long as they use a reasonable stop. 24 might be a major high or low. Other traders will say 21 is the major high or low. You can use either one, but if you get stopped out below 24, you might want to look to re-enter because it might be a trap. The market often tests obvious stop locations and then reverses. 30, an inside bar. The bulls are hoping it's a double bottom. Maybe it's a little far from 24 to be a double bottom, and we may have to go lower. Again, 30, it's a high one, just like 29. Probably sellers above. 4-bar micro channel, so the first reversal up will probably fail. But look at all the tails and overlap from the bar 27 to 30. It's a channel on a smaller time frame. It's more clear. And bear channel means bull flag, and it's clearly a bull flag in a strong trend. 31, a bull reversal bar, closing on its high, but a small body and a small bar. And like I said, it's a micro channel since 27, and now it's 5 bars. So the odds are there's sellers above, but they're selling for a scalp. Bulls are disappointed who bought the close of 27. They're looking for any bounce to get out, and then looking to buy it lower. Inside bar, 32, the micro channel continues. Bad signal bar for the bulls, 32, so probably sellers above for a small second leg. And I'm saying this, but if I had to choose to buy or sell above 32, I'd rather buy and put a stop far below and go for a swing. This looks more like a sideways pullback in a strong bull trend than a major reversal. Outside bar 33, so we traded above 32 and found sellers, and then we fell below 32 and found buyers. So outside bars are trading range bars. At this point, 33 could be a double bottom with 24, a high or low double bottom, and a double bottom bull flag. You could also call it a triangle. Bears are hoping it's a final flag, a triangle, a final flag, but the selling pressure is still missing. We've had, to be fair, since bar 28, we've had 5 bear bars and 1 bull bar, or at least just 1 bull bar, and an absence of bull bars, really 1 bull bar and 6 bars. And that's great for the Bears, but they still need to do more. This might have been a trend line break. It was a trend line break. Here's the bull trend line. And we went sideways. Now the Bears want the bulls to have a weak continuation of the trend to test the high, maybe the high close of 27, and then get a double top and a major trend reversal. But we're still completely above the moving average. And this is pretty weak. It's a bear channel. Lots of tails and overlap. Not strong selling pressure. For a major trend reversal to the downside, you want to see strong consecutive bear bars, and we're not getting that. So still always in long, still okay to be long, and okay to buy for any reason. 34, the bulls again hoping or viewing this as a double bottom bull flag. 34 is a weak signal bar, but like I said earlier, you can buy for any reason, so even weak signal bars in strong trends are okay to take. We also had that pullback on 33, so leg 1, pullback, 2 legs down, and the reality is, if I pulled up a 1-minute chart, you would see many legs down and lots of failed breakouts below this bear channel line, and eventually the bears are going to give up, and what's happening is bulls are buying below bars. They're buying any pullback they can get, and if we do fall below 24, the odds are there are buyers below. But 24 can be considered a major high or low, so the bulls will defend that stop, and they'll buy before we get there. Bull bar 35, closing on its high. If you're a bear and you were hoping this was a strong enough leg for a pullback and then a second leg, you're probably sweating, for lack of better words, because you know we're always in long. This was 2 legs down, and the leg was weak. It's comprised of basically all dojis, trading range bars. Bear channel, bull flag. We're getting a breakout of the bull flag, and it's a strong bull bar. Not particularly big, but if you sold above 34, 35 is a problem. And then follow through 36. Minimum follow through. It's a doji with the bull close, but you can see the bears who sold above 34 trapped on 35, using 36 to exit if they were quick. 36 tested the high of 34. Still always in long, still reasonable to be long, buy for any reason. If you did exit below 28 or any bar, you could buy again above 35. A bear bar, a bull bar, closing on its high. And then another breakout, 37. Like I said, the bears are hoping we had a trend line break and then a retest and a major trend reversal. But look at the momentum back up to test the highs. It's not as weak as the bears would like, and the trend line break wasn't as strong as the bears would like. It's more likely just a pullback in a bull trend. And so what traders might be looking at is a measured move of this flag. We have this measured move target here. We have another measured move target here. There's measured move targets everywhere. Computers are using measured move targets with everything you could possibly imagine. This one, these 2 bars using the bodies, is about the same distance as half the distance of the bull flag measured move. Does not matter which one you use. The point is there are magnets above. The market is still going higher. Bull breakout 38, closing above all the bars to the left. 5-bar micro channel. The odds are we're getting at least a small second leg, and that there's buyers below 38. Can bears sell below 38 for a major trend reversal? Of course not. 39 inside bar, so it reduces the probability, but in this environment I would not sell above, but traders will buy below. And then you can see we went below 39 and found buyers and reversed back up, but could not close above 39. And so we might be sideways here. The past 3 bars overlapping pretty heavily. We're at a new high in the bull trend where some traders are looking to take profits, but still no reason to sell. Going a little higher on 41, I also didn't mention we reached the measured move target. It looks like 38, tested it just about to the tick, and then pulled back, and then we tested it again on 41. Maybe 7 consecutive bull bars here, and maybe even 8 if you consider 34. Not a micro channel because we pulled back below 39, but it's a small pullback, and traders might be wondering if this rally from bar 9 to 27 was all leg 1 and then a pullback and then maybe a big second leg. Since we reached that target, I'll delete it. And then here's a bigger measured move target we could look at. Maybe leg 1, pullback leg 2. And it's really far. It's all the way up here, so I'm not sure we're going to get there. But I do think we're going X points higher before X points lower, which means I think there's a directional probability. I think there's at least a 60% chance we're going 5 points higher before 5 points lower, 10 points higher before 10 points lower. It doesn't really matter what you use as long as it's not too extreme. 42, a bear bar, but a small bar and too much buying pressure. There's nothing to sell. Bulls, they can raise their stop if there was below 24 to above 34 because that's the new major high or low. We got a strong breakout to a new high. So bull stops are below here, and the bulls, their 1-to-1 is something like here. Outside bar 43. The market might be starting to go more sideways. We're at the measured move of this initial spike, which we reached at 38, and you can see we're going more sideways here. But we're still going up. We're still getting higher lows and higher highs. And the bears are simply not getting bear bars. 44, a doji, and a tick gap from the close of 43 to the open of 44. But 44 is a doji, and not ideal, not great to buy, but also definitely not great to sell. It's always in long and okay to be long. 45, an inside bar, and it's similar to what I said with 39. Probably buyers below, but I would not sell above. 46, a little bit of a surprise. It's a bear trend bar, but in such a strong bull trend, the first bear bar you get will likely be bought. If we fall below 43, the odds are there are buyers below, and maybe the market will go a little lower and test the moving average, but this could simply be a 50% pullback of this rally. So from the 34 low to the 44 high, here's 50%. We tested 50%, we went lower, closer to 70%. We fell below the moving average, but found buyers, could not close below. Consecutive bear bars, one being big, but not enough to flip the market to always in short. It's mostly profit taking by the bulls. I don't think bears are aggressively selling here. And like I said with 46, the first trend bar you get in such a strong trend will likely be bought. And then when 47 was weak follow through, you might have more bears. If bears did sell below 46, they might be looking to bail out of their short and take profits with whatever they can get. And bulls know that, and bulls will buy for any reason in such a strong, small pullback trend. Maybe they're buying 50% of this rally or 60% somewhere. Maybe they're buying the moving average. The point is traders are buying. It's more likely plus look at 45. It's a weak sell signal bar. So all this to say, the odds are we'll get a test of at least the 45 low before long. So traders are buying down here. And then 48, you can see traders bought the close of 47, we tried to break below the moving average again, but reversed up. And 48 is a bull bar closing on its high. So if you took profits on longs, maybe you exited below 46, reasonable to buy again above 48, still always in long. Trends get weaker over time, and you can see really strong rally, and then weaker rally, still strong, but a couple bear bars in there, and less steep. And then here we're channeling up, but we're still going higher. That doesn't mean, so trends get weaker, but that doesn't mean we're going to reverse here. I still don't think the bears have done enough for this to be a major reversal, because where's the bull trend line? Maybe there was a minor break of it, but we immediately pulled back. And then if you bought above 48, stop order bulls, immediately at a profit, a bull bar closing on its high. Not a big bar, but for the bears, not a good bar, because the bears are hoping it's a trend line break, and then we get a double top second entry reversal setup. But no one's going to sell below 49 consecutive bull bars, both closing on their highs, and 48 being pretty big. 50, again another bar that bears will not sell below. We're probably going higher. And we might get a measured move of the bull flag, maybe up to here. The leg 2 measured move might be extreme. Leg 1, pullback. Leg 2 all the way up here. But I still think we're going higher. It's a small pullback bull trend. Now the bears are getting more selling pressure. They were able to close a gap. We traded above 27, and the gap stayed open for some time, but then it closed on 47, but it only just barely closed. And if you look at a line chart, there's still an open gap because the line chart plots closes. So if you take the close of a bar or the open of a bar here and look at the close of a bar over here, there's no overlap. So there's still open gaps, which is a sign of strength and trapped traders, trapped bears. And trapped bears are a fuel. And when they're not able to make money, they'll be forced to exit their shorts at a loss, and that contributes to the buying. Outside bar 50, we're going more sideways here. We might be in a trading range since maybe 43. Here's an outside bar. We've gone sideways for almost maybe 10 bars. And it's an expanding triangle. The bulls see it as a bull flag. The bears are hoping we get maybe 2 legs down, 2 or 3 legs up, and then a major reversal. But it's like I said, there hasn't been enough selling pressure where the consecutive big bear bars and the major trendline break. We just haven't had it. Inside bar 52, traders buying below, but I would not sell above in this context. It's still a bull trend. 53, another bull bar closing on its high. Still within the range of 51 where there might be sellers above. But I think those sellers are minor, and we're probably going at least a little bit higher. And then 54, consecutive bull bars, micro channel since 51. Bears might argue it's 2 legs up, 1, pullback, 2. But look at these bars. They're pretty orderly, closing on their highs. And if a bear sold above the inside bar, 52, they're trapped on 54. Any small pullback, they might look to get out. And look what happened on 55. It didn't quite get there, but it tested back down and then could not get there and closed above its midpoint. So now 4 consecutive bull closes. The odds are the first reversal down will fail. This was tight enough for a second leg. What about, is this a wedge top? Trends are always creating wedge tops. And you never want to trade counter to the direction of the trend, unless you're scalping and you're experienced and you know what you're doing. But again, in this context, it's a small pullback bull trend. It's just so much easier to make money buying. There's not as much of a point to look to sell. The reality is this is a fairly strong bull channel, and until the bears get a major trendline break, there's no reason to look to sell. High 1 above 56, but high in the channel. So probably sellers above, but that's bears. maybe bear scalping and bulls taking profits. And then you can see we triggered above 56 and then turned down. So what about selling 57? It's a second reversal. We sold below 55, pulled back, and then it's a micro double top below 57. I think it's okay to get out of longs below 57. And if you do, you can look to get long again above a bull bar, closing above its midpoint. But as far as selling 57, it's like I've been saying all day, the bears haven't done enough, and it's a good looking bar, but when you weigh it against the entire context, is this going to be the bar that undoes all of this buying? Probably not. And there were buyers below 57, so if you did exit below 57, reasonable to buy again above 58. I was also saying earlier, trends are always trying to create wedge tops. 1, 2, 3. Maybe 1, 2, 3. There's always different ways to draw it, and it's always creating wedge tops. But when you're in a trend, you shouldn't be looking to sell. Doji 59, maybe an outside bar, so a sign of trading range price action. We've been sideways for 5 bars here. So there might be sellers above, bulls taking profits, and looking to buy lower, below bars. I'll mention this again. We've had one close below the moving average all day. So what do you think is going to happen if we test the moving average? We'll probably find buyers. Bull bar 60, but possible vacuum test of the channel line, which is resistance, which is where bulls are looking to take profits. But I would not sell the close of 60. The context does not support it. It's a strong bull channel. It's okay to sell bars like 60 in a tight trading range, but here, not ideal. Then we're getting the bull breakout 61, breakout of a channel, which is generally low probability. But when you consider everything about the price action today, it's clearly more bullish. And there's no reason to be looking to sell yet. Strong enough breakout, we're probably going at least a little higher. And this might be a leg count reset. The market's always resetting the leg count in strong trends. So this was a leg 1 up to bar 13, probably a new leg 1 on 19, a new leg 1 on 22, new leg 1 here, new leg 1 here, another new leg 1 here. Doji 62, so minimum follow through, but again, nothing to sell. Buyers below, and we have an open gap, the breakout point 55 high, so we might have to come back down to test here. 63 triggered the high one above 62, bull bar closing on its high. If you're a bear and you sold here, you're probably in trouble. Bears are hoping it's leg 1, paused leg 2, but the reality is we're probably going at least a little bit higher. 64, bear bar closing on its low, far above the moving average. So for the bulls, reasonable to exit below 64. It is a bull breakout of a channel, which is low probability. And the probabilities are market will reverse within 5 bars and test the trend line. So we're 3 bars into that breakout. We may have to come back down and test here. But as far as selling below 64, I would not. Inside bar 65, II pattern, bears hoping it's a final flag late in a bull trend. And it really could be. It's not uncommon to see profit taking late in a trend day. And we're getting fairly close to the end of the day. But again, I would not sell. And some bulls will buy above 65, betting the II, it's breakout mode, and it's a bull flag and a bull trend. And it looks like it's possible the channel line, we got a breakout, and then it's becoming support. 66, a second reversal, but we did not trigger a sell below any of these bars to the left. And so it's a micro channel since 59, maybe even 58. And so the odds are there's buyers below and a second leg up. But again, I think it's okay to exit longs below 66, look to buy again above a bull bar. Outside bar 67, so confusion. The market is getting contracted into a smaller range. It's a triangle. Then we had a failed breakout down, failed breakout up, breakout mode, and going sideways. Probably buyers below 67 and sellers above. Inside bar 68, IOI, breakout mode, sellers above and buyers below. 69 a bull bar, closing on its high, breaking out above 68, but still within this range. But as far as selling above, if that's your entry bar, I'd probably get out. Because look at the context. Follow through 70, so we did get the breakout of the channel, and then the bears had 5 bars to reverse, and they could not do it. And look what's happening on this channel line. The market's bouncing on it, and it converted from resistance to support. But again, we're getting late in the day, only about 10 bars left, and you might have bulls looking to take profits at the end of the day. 71 a bear bar, triggering the sell below 60, below 70, but consecutive bull bars, not a strong sell setup, and tight trading range, probably buyers below bars. 72 vacuum test of the moving average, similar situation as bar 46 and 47. You get far from the moving average, and then you get a couple of bear bars racing to the moving average, snapping back to it. But you've had traders buying above the moving average all day long. So what are the chances we break straight through the moving average? Pretty low. And the probabilities favor you have bulls waiting to buy the moving average. Maybe this was strong enough for a second leg down, but this was also strong enough for a second leg down, and traders will argue the second leg came on the tail of 48, so it could be really minor. And you probably have more bulls buying the close and buying below 72 than bears selling. Also a tight trading range here, breakout below it will probably fail. 73, buyers below, a bull bar, closing near its high, but tight enough down, we'll probably get a second leg down. Market might be in a trading range here. But as far as selling above 73, I would not, because the second leg down will probably just be minor. And we're still in the bull trend, near the trend line, so probably more buyers above 73. 74, bull trend bar. Any bear that did sell got trapped on 74, probably going at least a little bit higher. 75 immediately pulled back, so a bear that sold above 73, they got trapped, scaled in higher, and they get a chance to exit on 75. I also should have mentioned 70 was a bad sell signal bar, and it triggered on 71, and then we sold off on 72, so bulls got trapped here. And that's why when we tested back up here, the low of the bar, the close of the bar, bulls were disappointed up here, and they exited. But as far as selling here, where's the major trend line break? We're near the trend line, but we're not clearly breaking out of it. We've had a couple bear trend bars, but they're not consecutive and they're not especially big. More likely a trading range. Now again, we might get an end of day sell-off, which is profit taking from the bulls after such a strong rally, but the bears need to show more. Right now it might be tight trading range, big down, big up, big down again, probably buyers below 75, a low one at the bottom of a trading range, and a sell vacuum test of the moving average. 76, breaking below the moving average, but look where we're bouncing, this breakout point. So bears who were trapped on this breakout, scaled in higher, couple legs down, they get out. But now we've had 2 legs down. Maybe this leg was strong enough for its own second leg, but some traders see it as a wedge, and maybe an expanding triangle from over here, and still in a bull trend. So probably limited downside. And then you can see what happened on 77. Outside bar, broke below 76 and then reversed up. But it's like I said, possible expanding triangle. So as far as buying a bar like 77, that's also not ideal. The market might be converting into a trading range, and we're getting late in the day. So it's an impressive bar, but it overlaps all these bars to the left. So the context isn't great. Strong enough up that it'll probably get a second leg with buyers below. We have breakout points, the earlier high of the day, bar 70, and any of these bars where there were sellers above, they got trapped. So any bounce should lead to a second leg, but the upside might be limited. Follow through buying 78, so bull breakout and follow through. But late in the day, looks like the daily chart bar will close near its high. And then bear bar 79, but probably buyers below 78 and testing breakout points, so probably buyers on the close of 79. And then buyers on the close of 79, bull bar 80, but so late in the day. Plus you had bulls trapped above, bulls who bought the close of 78 trapped on 79 and disappointed. Any rally they may use to exit. And then we went sideways on the close. For always in today, I don't know, it was confusing at the beginning of the day because we had a big gap up, but then consecutive bear bars, one closing near its low, and it might have been always in short bar 2. But then when you especially got bar 7, it became more confusing, and it might have been a trading range, so better to be flat and buy low, sell high. And then it probably became always in long by bar 11 or 12, definitely 13, always in long. And then there was no reason, well, I shouldn't say that. The market never flipped out of always in long for the rest of the day, but there were reasons to exit longs. You can always exit when the market's always in long. You can always exit below a bear bar, closing below its midpoint. So you might have traders exiting below 15, but most probably won't because it's the first reversal down. Others would have exited below 20, but it didn't trigger. And then 28, you might have had bulls exit, but they'll buy again above a bull bar 35. Same with 46. Some traders might exit, but it's more likely a minor reversal. And if you do exit, you can buy again above 48. 57, same thing, you buy again on 58. 63, didn't trigger. Maybe you exit below 71 or 72, but then you buy again 73. And then where's your stop? If you buy above 73, your stop is not below 73. Your stop is below the most recent major high or low. And where's that? Down here below 59. For stop orders today, I thought it was likely we'd get a second leg after bars 1 and 2. So bar 4, the low 1, closing on its low, reasonable to sell below bar 4. I thought bar 9 was a reasonable stop order trade. It was kind of aggressive, but it was 3 legs down, 1, 2, 3, or 1, 2, 3. Would have been better if bar 9 closed on its high. But if you did buy bar 9, and bar 10's your entry bar, not ideal, but also nothing to sell. Bad sell below bar 10, so okay to stay long. And then you get the give up bar 11, and then more follow through 12, 13. Always in long and good to hold long. High 1 above 16, possibly early in a bull trend. After a strong rally, you're probably going to get a second leg and go higher. So reasonable to buy above 16, 17, 18, even 19. And then bar 21, you could buy above. It's a strong bull breakout, trapping bears. 24, another high 1, but getting later, and you've had 1, 2, 3 bull climaxes and a doji signal bar, so probably not as good as buying the high 1 over here, but still okay, always in long, tight bull channel. 2 legs down, 1 pullback 2. I thought there were buyers above 34, definitely above 35. And then all these bars, you have bulls buying above bars. When it's always in long, you'll have traders buying above any bull bar. And then 48, sell vacuum test of the moving average, strong reversal, buyers above 48. All through here, 1, pullback 2, high 2 above 58, buyers above. This was more aggressive. I said you couldn't sell the close of 60. Some traders might buy the close of 60. And then you get 61, and then weak follow through. Maybe traders exit here. You can see we went sideways for a lot of bars. What about selling? What about buying above? Actually, let me back up. What about selling 71? I think it's aggressive. I don't know about any stop order sells today because of the character of the market. Of course, after over here, once you get the small pullback trend, it's really hard to look to sell on stop orders because even the limit order bears had trouble making any money. Some traders will argue possible that this was a bull breakout of a channel, 25% probability, and then you get 3 legs up, bear signal bar, so some traders might sell below 71, but it's a minor pattern. The best case scenario, you get a test of the breakout points over here. And even if you did sell, you'd have to hold through this pullback. But what really happened here also with 72, bull breakout, pullback, start of the channel phase. Here's the channel. Channels convert into trading ranges. And here's the start of the channel. And look where 72 tested and bounced. The close of the bar is the low of 62. I thought probably not as many stop orders above 73 because strong enough down, it would probably get a second leg. Here's the second leg. There was no stop order trade on this time frame. You'd have to drill down to a 1 or 2 minute chart to find the stop order on this bar. That's about it for stop orders today. For limit order trades, again, so I kept saying bulls can buy for any reason, but in the beginning of the day, inside bar, bar 3, and strong enough down for a second leg, sellers above bar 3, bad high 1, sellers above 5, but did not trigger. Sellers above 7, but did not trigger. And then here, I would not sell above 9, would not sell above any of these bars. But for the bulls, strong enough micro channel, you know it's getting a second leg, buyers below any bar. Here's the first pullback. You can see we fell below it and found buyers. Same with here, but could not trigger. Same with here. Small pullback and then rally. There's buyers below 27, scaling in lower. Maybe stop below 24, maybe stop down here. But there's bulls buying below every single bar today. And that's about it for what I have to say there. Although, buying below 71 wasn't ideal for what I said earlier. Bull breakout of a channel, possible wedge top, maybe in a trading range, so not ideal to buy up here, but probably buyers below 62. And then later in the day, expanding triangle, so might be sellers at the high of the day, but if 77 is your entry bar, you might just bail out, and that's what 78 was. Buyers below 78 for a second leg, small bounce there. As always, please feel free to leave questions in the comments and include timestamps for any question specific to this video. And with that, I hope everyone has a good rest of their night.